Hi, Ron. I'm assuming we're live here. Sorry, I was checking my phone now. I think it's I missed out was going live. So let me just take my headset off. Let me just get the lights back on properly. There we are. I hope you're all well. It's Thursday. It's weekly claims in about 15 minutes. Relatively quiet this morning. The chart to our left here, to your right, my left. This is cable. We were long last night. Round about close last night on cable. Look for 50 points. It went against us quite significantly earlier. Hang on, that's a daily time frame. So we got in long here. I haven't marked it up on this chart. 136, obviously a big upside target. I can't remember. I think we said we were looking for 50 points, weren't we, on my trading platform? Let's have a look. Take point 50 points from entry. I can't remember. I'd have to open my trading platform, which I haven't got here at the moment. But basically, we got in round about the close last night. If you look at the 1 hour chart, it would have been actually went quite against us, didn't it? Where are we? We are, what state's today? 26, isn't it? So we are, that was this morning. Well, last night, quite a long way out of the money, weren't we? 23, probably got in on this one, the 29, probably around where we are now, actually. 135. I'll have to check the actual distance, but we would have got in here, I think, 135.50. So we were looking for another 25 pips. We got to 135.75 before we turned down quite significantly. Stop loss would be way below this bit at 135.20. No, stop loss on the daily would have been a lot bigger than that. I'll check that out. The one I did actually post the details of. Sorry, I'm talking about. You can't see what I'm talking about here. I haven't done any end of day charts for a while. I didn't update. I just realised I didn't update last week's finish for everyone, those that are interested. But this was last night. Aussie 71.89. We got in at 71.18 on 71.19 for the sake of 0.101. And it just about hit target. 71.73, I think is as high as it got this morning. I did notice that one. I don't know whether that was just because it hit target or not, but the Aussie did hit target, so that's half close, and then the stop loss is up at hasn't actually been moved yet. There we are. No, we didn't get to targets. All right, 71.72. That makes sense. That's the wrong number, isn't it? Unless I've typed this wrong. Anyway. What's that? That's 71.18, 71.72. Yeah, so that 72 it is. Is that right? 72 seems a bit 40 pips. 71. Anyway, it hasn't hit. I thought it hit target. Hasn't hit target. I thought that was a bit odd that Sterling had got halfway there in the Aussie. That looks a bit of a hefty target. Man, the stop loss is quite chunky as well. So anyway, that's not going anywhere. Cable's not going anywhere. And just for completeness, the other one I think was a Euro. Was it Euro Kiwi? Was a short position, wasn't it? I think. It's all right. We're not missing much. The data's not out till the bottom of the hour, and so not a lot gone on this morning. Obviously, the big news last night was Nvidia's earnings, which beat expectations, and then the one that really caught my eye was Q1 forward guidance, much better than expected. 72.8 billion revenues was the street's expectation. But Nvidia said last night it's anywhere between 76 and 79.5 billion. So much stronger than the street was expecting. Stock initially went up a couple of percent, 2.5% last night. It then came down to flat on the. Obviously, this is all pre-market and in the grey area, the speculative grey area, and it's about 1%, I think, advanced now ahead of market open in an hour or two. The other big news was Salesforce's numbers yesterday. Got overlooked, obviously, by Nvidia, but they were down 5% after hours last night. But Nvidia have ticked a little bit back up, and many are seeing this as a potential buying opportunity, despite the really elevated prices of these tech stocks. But interesting. It's really getting to a stock picking situation here, given that the fact that Salesforce fell again on AI rumors about their agents being been sidelined because of it, the development in AI. Just over 1% at the moment. JP Morgan. I'm just reading Nvidia here. They've upgraded their earnings, are up a bit back to 1%. So it's not as much as it was immediately, but they're still up after really strong numbers. That forward guidance was out the park. And the other key thing they said, which they hadn't done last time, was that there's no impact of any Chinese sales. So if things change regulatory wise, that could be, could go quite significantly stronger, the Nvidia earnings, if they do manage to get some data centers and some chips sold into China, other than the H200 one. So anyway, Nvidia, biggest company in the world, taking the mantle from Apple over the last few years, an absolute blockbuster of a move. Anyway, we've got I'm talking about that why we've got the Aussie dollar on here. So that's gone Norway. And the other trade from last night. Sorry about getting distracted. I get sidelined so easily, don't I? I don't know whether it's old age or not, but the other position last night was Euro New Zealand short. We were looking for 40 pips on that. Well, let me put that down there so I can get that later. Let's have a look at that Euro New Zealand situation. Euro New Zealand. The view at the end of day trading, guys, is it's gone against us, hasn't it? Clearly, from where we would have got in last night. Let's look where we'd have got in. That's where we got in last night. 25th was last night. We were down here somewhere, so that perhaps has been stopped out. 10, 9, 10 is probably that's probably around about. Interesting. That target level from the 28th would have been an entry level probably last night. Oops, sorry. Let me just grab that, move that. I can't move that. That's that. So we'd have probably got in around about here somewhere. Or it might have been lower than that, but I'll check the actual entry level. And so if that was 196.90, we were looking for 40 pips, which is 50. So it might have got there. Sorry, no, it won't have got there. Will it? 96.65, 96. 196.50 would have been the target level, so it would be down here somewhere. So it hasn't gone, and it's reversed again. So it depends where the stop loss is on that one. I'd have to check the trading platform to see that. So 40 pips target. So if we did get filled at that 96.90, 40 is 50. You silly old bugger. In fact, it's lower than that, isn't it? So yeah, that's out of the money, and it may have been stopped out as well. But it's an end of day one. It's not so I'm quite relaxed about that, even though it's whatever it is, 20 pips out of the money. It's gone against me. The initial boost here at 5 o'clock, 6 o'clock this morning hasn't followed through. So maybe looking to close that one out as well, minimize losses on that one. But it's rallied and it's come back down in the last couple of hours. So anyway, short Euro New Zealand, long cable and long the Aussie were our trades from last night. Right, let's just get to the calendar. Say not a great deal going on today. The main event is coming up in a minute's time. So let's bring in the calendar so we can all see that. We've got the weekly claims, which have been remarkably resilient. Nothing really from Miss Lagarde this morning. It changed the course of the outlook for the euro. Unemployment claims. Remember, these are the new numbers coming in per week. The continuing claims have also shown remarkable resilience, although ticking up a wee bit. In the 4-week average, it's ticked up a wee bit as well. But we'll see what that looks like in a minute. And let's just bring in the euro. Well, actually, let's wait here till this comes across the terminals and see what we say. So these are remarkably strong numbers, or just suggesting that the shrinking of the jobs of the actual work market as the impact of Trump's immigration policy grip the hasn't that updated? Still pending. You see, this is the problem with trying to trade the news, guys, when you've only got a what's it feed. So again, stronger again, 212,000, 206,000 last week, 5,000 less than expected. So it's a significant decline from expectations as well. If we look at the calendar, if we look at the chart, which we do every week, and see, the resilience in the jobs. See the expectations here. It's coming much better in the sense that there's no new claims consistently here for. Well, not consistently, but most weeks it's coming in better than expecting. It's done it again this week, 212,000 compared to 217,000. So again, it's shown perhaps I've been saying the strength of the US jobs market. Those that want jobs can get them. Sorry, that's not necessarily. That's let me caveat on that. Those that have jobs and with bonus payments are doing okay and doing quite well. Those that haven't got jobs are still struggling to find jobs, but there's not a lot of people joining the market as new unemployed people. As that's just showed you, 212,000 this week. So the spike we had, perhaps because of the weather at the beginning of February, particularly in the northeast of the US, has tailed off a wee bit. So this is a really strong, in traditional markets, this is really strong. If I zoom this right in, I don't know how far we can go back, but we go back to pre-COVID. 200,000 is a strong, strong. As you see here, 150,000 here in the run-up to the COVID lockdowns. So economy from a claims point of view doing quite well. So again, there's mixed numbers, mixed readings we're getting from the jobs market, but that's a good indicator for US claims that the government has to pay and people that are coming new to the unemployment market. So let's have a quick look at how that's implemented. Probably not a significant impact. So we're still holding 118 on the euro dollar. We're going to look at the 5-minute chart, going absolutely nowhere really, ticking higher. On the break of 118 from 11 o'clock. So the last couple of hours we've moved up, and so the initial reaction was a move down. If I just put the 1-minute chart on, I don't know how many of you trade the 1-minute chart, but there's the data at there's 30. There's the data there at 30. So the rollover has happened. This mean reverting strategy, we touched the outside once, twice, 3 times. We haven't got a clean cross. A bit of you could zoom in there. It's a bit messy. It's the risk of trading the 1-minute chart. It's a bit more volatile. We go to the 2-minute or the 5-minute. 2-minute that's rolled over there. That's short nicely. So there you can see that clock there. You could have got in on that one there. So that's been short from wherever that was, 26. So if you got standard account, wouldn't have been able to take that one because it's within the 5-minute window, but risky on that one at 24 minutes past. It has turned down. It's still. So if I move that up, you can see there's still a bit of gap. We've got a sloping down of the blue, the K and the D line. So we've touched here numerous times. So if you've been patient and got in that one already earlier, you're very much in the money. Target 1's been hit already. Stop loss. I'd have it rammed right down now as we're trying to move this lower. It's continuing to move lower. So the MACD is slower. The MACD didn't cross till right on the 26 minutes past, but again in the window of our trading window. But down target 1 at the Bollinger Band. Bit of a retrace at the moment, but our stop loss now from the top of the turn, top of the market, top of that wick there. We got in here. So stop loss would be here now below where we got in. So guaranteeing our next phase. So whether we're taking 50%, actually, if we got in there, I would have taken 50% off there. So we've still got 50% on the exposed, and we're moving down. Stop loss here now. So let's just shall we down that trades? So there's a stop loss there now from the entry that would have been here. Some of you are asking about actually let's put a green for go again. So green for go would be there. It's here. make that a go. So my stop loss would have been up here. It's now down here and taking profit there. First target. So 18.14, profit at 18.12. Hardly any movement, but that's the issue of trading in the short term. That's what you're looking for. Remember, a few pips, but they're on the close of that were 18.12, so 18.14, so 2.5 from 14.18. We're in the money. Stop loss is here. Spread is nice and tight, so we're just chasing that down now. See if we reverse after the data. But there's the 130 candle where we went down. It was a closing down candle under the moving average here on the 2-minute chart. Spiked lower, which looks like maybe the low of this particular session, 118.10. But we then went lower again on the following candle, and we've bounced a wee bit at the moment, but we're capped there. So I'm going to leave my stop loss just there for now. In fact, I would pull it down to the top of the candle now, locking in a few more bits of pips when we're scalping. So it might be a bit too tight on that reversal. It's very tight there on the 2-minute, but that's scalping for you. So we're in the money following the move down there on the euro dollar. The stochastics line still moving down. We're about to touch perhaps the oversold area, so it might be an area to perhaps take some more profit once the K or the D line gets there to the downside. As far as MACD is concerned, that's nicely negative, but we don't use the MACD here. It's got in later, and that's still moving down, but we've got a bit of a stretch there, so we might take some more profit off. See how that goes. We'll come back to that. That's our short following the news. Elsewhere today, I'm sure you're all aware, we had that spike on Bitcoin, and we've since actually moved up for the last day and a bit. So this morning, if I take this in the 2-minute chart, take this to the 4-hour chart, we had a go at 70,000 this morning here. Sorry, it was last night, not this morning. I thought it was this morning. It was this late last night. We had a go. So we had a strong day yesterday. We look at the daily candle on old Billy Bitcoin. From what looked like a capitulation under 65,000, we had a big engulfing candle yesterday, and this is a bit of a turnaround. This is 3-candle pattern here. Strong candle. So this big day yesterday. Not really. There was a lot of chatter about regulation earlier in the week, and again a bit yesterday, but nothing really to signify that. So clearly, you could say buys at 65,000 were accumulating yesterday. You had a similar thing here when we first went through 65,000 back here at the beginning of the month, but we still remain, very, very much range bound under 70,000. This tick up we'd seen earlier in the middle of the month had given up into this final week of the month up until yesterday, and then we've lifted up, so we still remain very much sideways action. Nothing to get too excited about. Yesterday was a good day because it enveloped things. We'd like to see obviously a clear break and a big body of the candle over that 70,000 level on an end of day basis, testing the top of the Bollinger Band now, which is at 71,500. The bottom of the Bollinger Band is at 64,400, and you can see the bottom of these candles from the beginning of the month took us to 64,400 again. So we tested it there. We've tested it here in the last week of the month. So it's clearly the extremes on the day, 63,800 area, under 65,000, but accumulated buys at 65,000. So a move higher yesterday, but one candle doesn't necessarily a trend form. That's a trend. So we've come down from that 95 plus here at the beginning of middle of January to the beginning of February. Massive sell-off in those 2 weeks. So out of that range, we need to break for Bitcoin to move higher. So that's where we are. Anything else? Anybody wants to look at any other trades? Let me know. Crypto, so still watching and waiting. Obviously, the oil market very much a wait and see mode as far as what will or will not happen regarding Iran. There's another round of talk started today in is it Istanbul or was it Oman? Or was it Vienna? Oh, I can't remember. Anyway, representatives from the Iranian government and Trump's son-in-law Kushner and his golfing buddy Witkoff leading the US side of things with the Iranians. Iranians again talking positively. We want some sort of deal. Blah blah blah. It's how patient Trump's going to be. Remember, he issued that 10-day, 15-day window for some progress in negotiations. There's an awful lot. I've been saying it for a while now. There's an awful lot of US hardware in the Gulf, having left the Mediterranean, in the Gulf now. 2 big carrier fleets. He's not the sort of guy to back down, is he? But this is obviously incredibly serious situation with Iran, supporter of terrorism, the regime anyway, in the Middle East and wider region. But all their proxies are very, very much damaged by the action of the US and Israel over the last year. So are they going to try and finally go for regime change? It's a big political call. We'll see what happens over the next weeks and months, no doubt. But everybody, Putin in particular, thought that the invasion of Ukraine was going to be over in 3 days, possibly 3 weeks, and here we are 4 years later. Ukrainian people are putting up tremendous resistance, and there's no movement on that deal either. So the misery goes on. Pointlessness of war, my friends. But anyway, so oil is giving up the panic over the Iranian situation, back under 65 on the continuation of talks today. But supported by the 20-day moving average, right smack bang there as we speak now at 64.50. So that looks like that's rolled over. Looks like it's run out of steam at 66. 67 was a step too far, and we're back under 65 today. So, but still relatively bid to the upside. You can see the stochastics have rolled over on WTI. So Forex, the dollar relatively still on the front foot. If we look at the dollar across the other pairs, we saw euro back over 118. Yen back to 156 from 157 plus yesterday. So it's dollar giving up a wee bit there. CAD 136.89 at the moment as we trade. So it's topped out, can't break and hold over 137. That looks like a pretty strong resistance. That's 1, 2, 3, 4, 5, 6, 7, 8 days now. 137 can't be breached for dollar CAD. So watch that one closely for any particular move. First move would be a break back into the under half of the Bollinger Band at 136.50 breaking. A break above 137 would then be tested 40 pips later by the top of the Bollinger Band at 137.42. The stochastics here showing some sort of fatigue as we've gone into the overbought area. That's obviously clearly shown with the topping out of the candles there. So that is looking like potentially a rollover, but too early to call that on an end of day basis. For dollar CAD, sterling 135.40 still big strong day yesterday through 135. 136 is the next upside target. Interestingly, the 20-day moving average now has come down below the 136 handle. So big thick resistance there for cable. And I think we would have this leg is over now. This last leg down here, this extended leg from this top at 138.60. We have breached that first fib level to 26.36. So you can see the next fib level. You think you'd make this up, don't you? As if it's by magic, Fibonacci. It's not. This is what happens, my friends. So we got the 20-day at 136, and the next key, or the first of the key fib levels, the 38.2 level at 136. So that's a big, thick wall. So we got like 3 key indicators sitting at 136 to prevent the price banging through. So the wall's thicker than it might be normally, and it does indicate. So we could see this downtrend possibly continue. Obviously, the floor took us to here, this intraday low from last week when we went to 134.40. So that's still Although over the key 135, let's see how much of yesterday's strong gains we can hang on to into the weekend for sterling against the dollar. Key symbolic more than anything, by-election in Manchester today for the government, the Labour government of Keir Starmer, and also for the upcoming right-wing Reform Party, and even the sort of left-wing Green Party as well. Apparently, a three-way split is on the cards, but that suggests that the left of centre has been split between the Labour Party and the Green Party, and the Reform are scooping up disillusioned Labour voters and Tory voters in that particular ward. I mean, it was a strong Labour safe seat, but political discontent with incumbent governments the world over and historically forever continues. But this could be quite pivotal going forward. So anyway, see how that that result from 10 o'clock tonight when the polls close in Gorton and is it Dalton and Gorton? I can't remember the full name of it. So anyway, sterling still under the 20-day moving average, 136 big resistance, 71.14. We saw the Aussie because we were long this, aren't we, from last night. Strong day yesterday, gone nowhere today. Kiwi similarly 59.88. Strong day yesterday, actually come down a bit today. Kiwi there, and Swissy at 77.42, having a better a weaker day today. Dollar having a better day against the Kiwi. Against the Swissy. In fact, having a strong day. I didn't notice that earlier, but that's quite a big old move down there for the Swiss franc. So that run up may be over. That's quite a big. That'd be one to watch actually later on. So that's taken out 1, 2, 3, 4, 5, 6 days potentially. That is an interesting one to watch. So dollar up against the Swiss franc and the yen today. To the downside. Stock markets. Yesterday we closed moderately higher yesterday. Well, not moderately high, actually quite strong up yesterday. 56 points on the S&P 500. We closed 6,946 last night on the cash market. So our derivative here is at 6,957 at the moment. We're up 0.8 of 1%. The Dow was up 0.63 of 1%, and the Nasdaq, the tech-heavy Nasdaq, on the expectations of Nvidia, was up a huge 1.26% yesterday. So still chopping around at these highs here. The S&P 500. Let's just do that. There we are. And a little bit directionless, but tapped out by 7,000. You see, so compression at highs. That could that could expand. That could explode. Either way, quite significantly. It's a bad daily. Why is that such a mess? That's a daily chart for the S&P 500. But you can see, big support down here at 6,500. There's 6,700. This bottom line here, and the top is 7,000. So sideways action. But again, if we zoom in for the last few days, strong day yesterday with that 50-point gain and holding over back into the upper half of the Bollinger Band, and still quite shy, some 50 points shy of the key 7,000 level. As you can see here with the stochastic, it's just looping around the non-directional, around the 50 level here on our stochastic line. And again here you see the MACD line, the histogram not moving anywhere. But just ticked up yesterday on the strong, and we're up again today. Bit of a cross on the MACD and signal line, interesting, but it's still negative. It's still under. It's still zero. But that might be another test of 7,000 coming. It may not be as well. Really difficult one to call. Very choppy there. The Dow similarly 49,600. 3 days up this week from the panic on Monday. Huge sell-off. So we've just about recovered that at the moment, but again we're stuck at the 49,600 level, as you can see here very, very clearly. It's been a resistance to the upside for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We haven't been able to break over that. So quite easily, we could come back down here to test the bottom of the Bollinger Band. And again, the step here to the 50,000 was it was only held for a few days, wasn't it? But we're still 500 points short of that 50,000 level. And again, it's a level that we've struggled with in the past in this first leg up. So this might be, that might have been the cap for now at 50,000 plus. But obviously, time will tell. We are now virtually washing up the earnings season with NVIDIA's numbers, and I say Salesforce's numbers yesterday. We have got Dell tonight, formerly a private company, now reporting earnings. President Trump very keen on Dell, by all accounts. Michael Dell himself, a bit of a supporter of the president, like the many technologists or tech entrepreneurs. But see what their numbers look like later. Once a key bellwether, Michael Dell and his little PCs made from home as he started off all those years ago. But yeah, so Dow up on the up, and finally the Nasdaq best performer yesterday. As I say, 1.2% yesterday. Big old candle through that key 25,000 level. So is this going to lead others higher? Those numbers from NVIDIA are particularly eye-watering. So that's looking positive. Big breach of the downward sloping 20-day moving average. We've got the Bollinger Bands moving in, which is interesting. We've had some key volatility back in the market here on the 12th, and again yesterday, some big candles, a big down candle here. And it took a while for that to then breach the 25,000. It looks like we were waiting. 12th, is that after the techie companies had reported? I think, yes, it was, wasn't it? I think it might have been, actually. Let me just when did they report? FOMC was the 18th. Google's the 4th. Yeah, Amazon was the 5th. So, yeah, they'd all reported by then, hadn't they? I thought I'd made a note of it. No, it's in video. Yeah. So the biggest of them all, anticipation lifting us. So we'd like, as the cash market opens in half an hour, are we going to get ahead of where we closed last night? We're currently down on the date. See that on the Nasdaq from the hourly chart. So that was last night's close up here. And we've been down in the futures market. But interestingly, the 20-day or 20-hour support is quite nicely this morning. So we've been bidding the European session, and we've been up for the last 3 hours. So this looks like a positive start for the Nasdaq at least. And that, I see here on the hourly chart, that's still running higher from across there. But we didn't see that's gone down and rejected the move lower. So this is suggesting this is trending rather than, and you can see it's clearly trending rather than mean reverting here on this time frame on this strategy. Just a quick flick to the trend following strategies. That's what's our Heikin Ashi candle telling as well. Our Heikin Ashi candle's been positive. Oh, sorry, it's 5 minutes. I just got the. I always forget it doesn't reset to the time frame we're using. So again, this has been positive since 6 o'clock this morning, European. So it was weak sell, turn around and go long out there at 11 o'clock this morning, and then gone long again here because there's no wick. That's quite a reaction to that move. So Heikin Ashi hourly positive. Our other key trending one, our moving average. So look to go short yesterday at 1 o'clock, and then it's turned around. Oh, it's 5 minutes. Sorry. What am I talking about? That was utter nonsense, wasn't it? So it was long yesterday, and it's been long. So there's the top last night, 9 o'clock's come back down, taking you out of that long trend if you'd still been in it, and that's then triggered long there this morning on the European Open, 6 o'clock candle, 6 to 7. So we were long at 7 o'clock, or re-long if you like, as a continuation trade. And this is looking like another entry point here as we're at the top of this candle here. So another entry there, potential on the completion of this candle in 5 minutes there on this moving average strategy on the 1 hour time frame. So that's positive as well. And our MACD and SAR was negative earlier on. Hang on a minute, 5 minutes. It's got the hourly reset for you. So that's actually interestingly short Nasdaq. I've got the right time frame. Yes, short on the 1 hour still. So it's not react. So that's gone short there, but hasn't worked out, has it? You've been stopped out. So that still hasn't flipped. So that's interesting. That one's still on the hourly chart, still not flipped to go long. It's been short and then stopped out. But the Heikin Ashi is long, and our moving average, crossing moving average, is long also on the Nasdaq. As we approach the open. So there we go, my friends. Just a quick recap of the data, the main data of the day. Claims, weekly claims came in stronger than expected at 212,000. The continuing claims, let me just find the continuing claims for you. So I say there's not a lot going on this week. Tomorrow's PPI. Let me just share this with you. The investing.com calendar. So the 4-weekly average actually ticked up a little bit, 220,000, 219,000. Continuing claims at 1.8 thousand, 100,000 or a million, 180,000. And the where's the initial claims weekly continuing claims 1.8 and a 4-week 220. So they've all come in better than expected. Around about 220,000 is, for a 4-weekly average, it's pretty heft. Pretty good number. Earnings slip a bit in Canada as well, so I didn't see that one coming up. So there we are. Next major piece of news really is the inflation data, the CPI data from the mega urban area that is Tokyo tomorrow. So interesting, quite a significant decline for February, from 2% to 1.7%. So the spectre of disinflation raising its head again in Tokyo. Potentially that's quite a big miss. So that could be quite significant later for the yen, because that's quite a difference if it does come in hotter or it weakens more significantly. So watch that later on tonight. That's the key main news still to go. So tomorrow we'll be live here again for the PPI data and wrap up February. We'll do a wrap of the week and obviously the wrap of the month. Let me leave you with, I don't know, did we actually open? Did we actually look at gold? No, we looked at gold, did we? I only got to indices. No, I didn't actually get to gold, so I was going to wrap up before I even got to gold. What? Please take this man away. So gold has been drifting so far today. Let's open the our default chart, which is our mean reverting chart. So there we are, sideways action today. So down candle late last night. It took us down, but we're still at 5,170, still at record highs for the gold market. I was shy of record highs, but over $5,000 an ounce for gold. I never thought I'd see the day, to be honest, my friends. But there we are. Don't think about things too much. Just trade what you see. So sideways action on gold for the last couple of days, most of this week, really. So if you're trading that, trade the tops and bottoms. You see here on the hourly, that's gone down again on the under half of the Bollinger Band there at 9 o'clock this morning. It's drifted lower, but it's bounced back up. So you're very difficult to make money on that move there. The shorter time frames might have been happier hunting ground for you. Perhaps not. Oh, there we are. That's a bit more action. So short here after that big down candle. Confirmed the move, so that would have been short there. Stop loss up there, target 1. It's reversed. If you pulled your stop loss down, that would have taken you out, but then we've gone down and got to target. So that's a successful cross Bollinger Band move from the bottom here to the top, and then from the top to the bottom. So we're out of that one now. Although, yeah, so it would have hit there and I'd have closed. I'd probably left some on because that was such a big candle. It would have still been there. I might have panicked and closed out with that 2-minute move up, but no. So some of it's still on, still. So that would probably still be open given. Oh no, because we claimed back, didn't we? We came. What happened there? So we got to target one, we reversed, and then we had a cross of the blue there at that. So I might have panicked and got out there, to be honest, with that volatility. Oh, look at the volatility there on the news. Oh, of course, that's the news, isn't it? 1/3. So yeah, I don't know how that would have ended. Actually, the second part certainly would have got the move from the top to the bottom. That would have worked out, and then yeah, the other 50% might have got closed out, but on that retrace there. So that's hit my target. That's been a volatile one. That's been down and then up. That's been. I might have pulled. I'd probably have had a stop loss. Don't know. Probably about half of that candle is there. That's where it would have been. It would have been there. Whether I'd have held it as that's come, might have stood up by the spread as this candle's come back here, right? Sorry, but it's still moving down. So but certainly the data might have actually gone with us, hasn't it? So I'd have got that there. That's gone down. Pulled it perhaps at the Bollinger Band or something, but and then got out there. So yeah, so perhaps we probably would have got the second half of that trade. Whether I took the whole 50% off, or just it's a big move, isn't it? So I'd probably just took 30 and left 20 on, and then brought the stop loss down a bit tighter there. So it probably got the final 20% or 30% would have been left, and probably would have been taken out on this retrace here after the news at 13.50. But anyway, successful trade. That would have been a successful trade as well on the mean reversion type of on the 5-minute chart, and that's in line with what the higher time frames are doing, because the higher time frames are still stuck in a range as well. So that's played out. You can see here the hourly being more or less negative for 1, 2, 3, 4, 5, 6, 7, 8 hours now today. So drifting lower there on gold. Okay, so I'll only leave you with the gold. We put a trade. We put a demonstration trade on, didn't we? Was it euro? Yes, it was, wasn't it? On the 5-minute, wasn't it? Forgot about that. So we come back to it. There we are. So nicely in the money there. So there's our stop loss. See, again, have a system. Trade your system, and if you've got a comfortable stop loss, you don't need to be watching it all the time. Even when we're trading, was it 5-minute? Was it 2-minute? I can't remember now. Oh god, I think it was 2-minute. We said, didn't we? Yeah. So I can't remember where we got in here. That was it 2-minute or 5-minute? It was 2-minute, wasn't it? Yeah. So that perhaps that has been reversed out, because it hit target, didn't it? We pulled it down. Yeah, so that's been, unfortunately, we got too aggressive with our stop loss, and that has taken out the second half of the position. But if I'd been a bit less aggressive with the stop loss, we would have just left it at entry on the 2-minute. That's a problem with anyway. We got half of our trade, and the other half was closed out. On the 5-minute time frame, higher time frame would have that would have been a different. Yeah, it was 2-minute because that hadn't crossed there. Yeah, so it was 2-minute we were trading on. So there we are. Half the trade, hit target. Stop loss got too tight and took us out. But anyway, half a winning trade. There you go. What can I say? Anyway, take care, everyone. I will see you tomorrow for PPI and a wrap up of what has been another interesting month. February comes to an end tomorrow. So let's have a look what your stats look like for February, my friends. 2 months down of the 12 already, 2026. January seemed to take forever. February's flown by. Okay. Be safe, be good. And if you can't be good, keep your